Take it away, Marie.
Okay, of course, thank you to Christine McClellan, who is our finance chair, but she also is our technology guru with Zoom. And thank you for always being there for us. We appreciate it. So um, I want to say hello to everyone. I'm Marie Presti, and I am your president of the Residential Real Estate Council for New England region this year. And I'm very proud of our great team that we have and of the content that we put on. And today is our Meet the Masters for October. And we have a great master with us who's going to talk with us about insurance. I will share my screen just because I have a couple of minutes of just talking about some up and coming events. So if it's okay, I'm going to do that, which I think, let me know if you guys can see that. Just give me a thumbs up. Thanks, Christine. Okay, so first I want to introduce our leadership team, who I know is on the call right now. This is our screen share shows the entire leadership team, but I mentioned Christine McClellan already. Christine, why don't we start with you and you can introduce yourself and we'll go down.
Sure. Christine McClellan. I am the finance chair and I'm on the South Shore of Massachusetts.
Michelle?
Morning, Michelle Hagstrom, president-elect of RRC for this year, and I'll be president next year.
Which is coming pretty quickly. Yay! Okay, Christina?
Good morning, Christina Silva here, Mass and New Hampshire Network Director.
Great. Thank you. So, and we do have other members who will probably be joining us. I might just be joining a little bit late. What I'd like to do is just scroll up and talk about a couple of up and coming events that we have happening. Obviously, this is today's event, our Meet the Masters, and we'll be introducing Tim Gleason in just a minute. He's on there as well, waiting to talk to us from the Sullivan Group. And then tonight, we do have a golf event. Now, you don't have to be a golf member to or even be a golfer to come. We are having a networking event in Rhode Island. It's in Cranston at Top Golf. And if you do like to golf, and it is undercover, so I don't want anyone to think they have to be outside on this rainy day, please come tonight. It's from 4 to 7. It's free for all Residential Real Estate Council members and $35 for non-members. And there's a QR code there you can take a picture of if you're interested. If you haven't signed up yet, you can still sign up. Or you can email me and let me know you're coming and we'll have you sign up when you arrive there. But we have a good group coming. It's going to be fun. And it's being sponsored by Bank 5 in Rhode Island. So please join us. All right, here's some pictures just showing us when we were in Connecticut last month. And we had our Connecticut networking event. And you can see all of us in there. We tried to get one picture with all the RRC members, but this was the Eastern Connecticut Conference, and we were at the aquarium the night before, so there were actually about 75 people there, but we had our good group of RRC members showing representation, and here we were having fun with the photo booth. Also want to mention that, this was our main event last week that we had. That wasn't our main event. That was down in Connecticut. We had a booth at the ECAR conference, the Eastern Connecticut Association of Realtors. And here are a couple of our RRC members that I had pictures with, and it was fun being at the booth and talking to everybody from Connecticut. I also just want to mention that we do have NAR is coming to Boston. The National Association of Realtors Conference is coming to Boston. And it's the week of November 6th. And there will be RRC meetings in Boston. So if you are interested in coming, please go to the CRS.com website and sign up to come to the meetings. But the night before the meetings, which is November 6th, we are having a New England sponsored night out, but it's for all of the residential real estate councils throughout the world. So there is going to be, we're guessing there'll be over 100 people coming. It's a great networking event. Tim, you're welcome to join us if you'd like to as well. It's going to be at the Seaport at the Flight Club, and there's the link to register there, which is also in your newsletter if you saw that for September. It's $50 for members and $75 for non-members. It's going to be a lot of fun, and we have some fun interactive events being planned when we're there, in addition to throwing darts, of course. So register now. And then that Sunday morning, November 10th, there is the Realtor Relief 5K run. So many of you have signed up for it already. We have an RRC team nationally. It's called Wicked Smart. So I hope that you'll sign up for that. The runners are $50. A walker is $50. So you don't have to be a runner, and you don't even have to be a walker. You could be a cheerleader and just do $50 to be a cheerleader. Now, if you want to stay in bed altogether, you can pay $100, stay in bed, and support the Realtor Relief Fund. And certainly with Hurricane Helene and all these other hurricanes and tornadoes going on, we have a lot of things happening that are natural disasters. So we really need all of us to try to pitch in and support our communities. So please consider donating to that in some way, shape, or form. But that morning, and Christina, we said 8 a.m. here for the race. However, if you want to just talk real quick about breakfast.
So the location is still being worked out, but we will be doing our team breakfast at 6:30 before the race, and then I'll go over to the starting line together.
Okay, so it's 6:30. I think we put 7 here, but we're moving it up because the race committee members asked us, they want us to be at the starting race by 8 o'clock. So we want to have at least an hour to network with each other. So, but we'll let you know exactly where it is. We will, and if you register as part of the team, you'll automatically be notified as to where to meet us that morning. So we hope that you'll do that. So, all right. So that's what we've got right now. I'm going to go back up and turn it now over to Michelle Hagstrom, who is going to facilitate us with our discussion with Tim.
All right, morning, everyone. So we have Timothy Gleason with us from the Sullivan Group, and he's our insurance guru. So he's going to talk to us a little bit about the insurance rates that are rising, and if you can even get coverage these days. Sometimes it's a challenge, and what as realtors we can do to keep our clients better informed, and how we can help them through the process when they're with all of their insurance needs. So Tim, you can, if you want to introduce a couple minutes on yourself, that would be great. Otherwise, you can just take it away.
Sounds good. Well, thank you guys very much for having me. Can everyone see my screen? All right, so we'll just start this right up. So I know insurance is a hot topic right now for everybody, so I'm going to do my best to give you guys a quick rundown of what's going on. Hopefully leave some time and answer any questions that you guys have. We'll start with a quick intro, go over some industry trends that I'm seeing, obviously rate increases being the driving factor here, and then what we can do to help, how we can educate new home buyers, first-time home buyers, and kind of stay ahead of the curve here. So just a little bit about myself. I run the personal lines team here at Sullivan Group. We have about a $14 million book of business, and we represent about 12 carriers. So I'm not just giving you kind of what's going on with 1 or 2 carriers. We do have access to all of them. So I'm going to try to give you a pretty good understanding of what I'm seeing as a whole. A lot of our business is focused in the Worcester region. We do run a lot of business on the Cape, but we do hold license in all 50 states, so it's not just Massachusetts. So quick overview of the 2024, what we're seeing in insurance. There's a lot of pressure going on with the reinsurance market. All the storms that are taking place, the wildfires that happen in California, Hawaii, all the hailstorms that are happening in Texas, Tennessee.
I just want to, Tim, can I just ask you, are you forwarding your screen? Because I'm still seeing the main screen.
I was. So I think
so share the full screen.
I don't know how to switch the share.
You can reshare if you want to when you're presenting that full screen if you want to. Either that or you can just click the buttons to go through. Like right now we're on your MA, Mass Personal Lines Insurance. There you go. Yep.
Got it. Okay. Yep. Well, sorry about that. Thanks for letting me know.
No worries. I just wanted to make sure we saw.
Yeah. So a lot of pressure going on right now with the reinsurance costs. What reinsurance is the insurance for insurance companies. So the insurance companies are basically a client of the reinsurance market. A lot of those carriers diversify their risk across the whole entire country. So they're not just writing insurance in Massachusetts and focusing on that specific area. The reinsurance market has a piece of basically the whole entire country. And some of the reinsurance markets actually have some international presence as well. So when you hear about these big losses, the relief fund, which you guys are doing and kind of trying to raise money, it's not just the United States. It is an international thing. So when those rates do go up, when those carriers have to pay out claims, unfortunately, all of those reinsurance costs do trickle down to the client. This was the biggest increase that they have ever seen. Reinsurance rates went up about 40% over the last 2 years. So that's a pretty substantial increase, and that is one of the biggest costs for insurance companies. So what insurance companies are doing to return to profitability is they are restricting new business. They basically don't want a new home that has a roof that's 15 years or older. So they're being upfront, being like they're being very selective with what they want, and asking a lot more underwriting questions than they ever have before. They're also running insured to value programs, making sure that the coverage is adequate in the event the property burns to the ground. All of that stuff comes with rate increases, and they're also increasing their deductible requirements. So what used to be the norm, a $500 deductible on your homeowner policy, is no longer the case. You're going to see a lot of carriers not even offer a $500 deductible anymore. $1,000 deductible is a lot more common, and you're going to start to see, we're recommending a lot of our carriers carry a $2,500 deductible and even go up to $5,000 depending on their risk appetite. So what's happening on the agency side and how this is impacting me is we have a lot of business on the books right now. So we're not only dealing with this on the new home buyer side, but we're also dealing with this when we're looking at remarkets, and it takes a lot of our time to get out there. People's current programs are going up 20%, and they're calling us. We're dealing with the labor shortage, short staff, and just trying to make sure we can keep the business on the books. So agencies are very thin right now, because a lot of what's going on in the industry and a lot of extra work that remarket is taking. Looking forward, there are going to be a lot of the carriers that put a freeze on accepting new business are going to start to come back into play, and that hopefully that will kind of level out the rates. We do anticipate the rates to continue to go up over the next 12 to 18 months, but hopefully after that things will kind of find their way back to a normal level. So what happened and why it's such a hot topic over the last 4 years is because it was a perfect storm with COVID. COVID, everything shut down. Carriers were actually looking at their book of business and giving people refunds because everyone was at their house. They were able to catch fires before they happened, and they weren't even on the roads because work wasn't even open. So on the auto side, they were giving their customers rebates. And what it allowed them to do is insurance is a data-driven industry. So it allowed them to look at their books, predict some of the storms, and see what's happening across the whole entire nation. The inflation hit us very hard during COVID as well. So not only are the rates going up, but the cost of materials are going up as well. Now, there was a pretty heavy labor shortage at that time as well, because obviously if people aren't going to work, how are these products getting manufactured? And when prices of the products, the lumber, everything like that goes up, it doesn't typically tend to come down. So we found our way up into a higher threshold, and unfortunately, we're seeing that the numbers in that space are staying where they are. A lot of carriers are found out during COVID that their properties or the insurance that they were providing on homes was underinsured. So they ran a program called Insured to Value. And basically what happened is the rates were not only increasing, but they were finding out that the cost to replace a home was about 20% underinsured. So they were getting hit with a 10% rate increase. The property was then getting bumped up from $500,000 to $600,000, which drove the rates even higher than that 10% increase. So it was a little bit of a mess for a while. It was pretty, if you look up here on the homeowners rates, the rates were very stable in the first couple quarters of 2022. And then things started to pick up a little bit once the regulations kind of caught up with us, and things are kind of up in the tens now on the homeowner side of things. What happened during COVID is, since everybody was stuck at home, the inspectors that were going out to inspect homes were also not going out. So carriers were pretty lenient on what they were writing because they didn't know what risks were out there. But now they're backlogged as well because they're catching up. They're going out to inspect all of those homes that were purchased during COVID. They may have not have been able to get a look at them. Now they have the data online. They're taking a closer look and being like, hey, I want to go inside this house. I want to get a bigger picture of what's going on. So some of the tools that they came out with over COVID is a lot of carriers made a lot of investments in aerial imagery. So what they're doing, there's planes that are flying over all throughout the day across the whole entire country and giving carriers an aerial view of properties. This is actually my home, and it was actually just taken on August 17th, 2024. So this gives you this picture in the left-hand corner gives you a full idea of what's going on with the roof, gives you an idea if there's any limbs, branches, trees hanging over the house, and just gives you a little bit more information on the property itself. You see if there's a pool here, there's a trampoline, anything like that. It also allows you to look at it from the north, the south, and everything along those lines. As you can see, the picture in the middle doesn't have the stone wall in the background. So these were a little outdated, but you can see that they got out there and actually retook the photos. So they are going to continue to do this every 2 years. And it does help agents a lot to get a better understanding, have conversations with new clients that a client may be purchasing a house that has some trees overhanging. They may not have put the cost to remove those trees into their budget. So it may be a conversation that you guys have when people are looking at new properties, kind of look around, see what the age of the roof is, see what's going on. Also, insurance score we're seeing a lot of non-renewals for people that are getting late payments, late fees, basically don't have a poor credit score. Carriers just aren't willing to write that type of business anymore. Then we already touched upon this. The rates on the homeowner side were going up about 10 to 12%. Inflation also hit, cost of goods went up, and labor got more expensive. So what we're seeing not only is it difficult to write new business, but a lot of carriers are getting off and non-renewing business based on the age of the roof. They have this aerial imagery now, and if you can kind of take a look at a property, I do this on every single piece of business that we write. I take a look at the overview of the house to see if it's something that we're going to have concerns with down the road, and if we are, we address that up front. Other thing is the carriers are starting to enforce higher deductibles. It's normal to see a home that has a replacement cost of $750,000 to carry $1,000 deductible. Some of the carriers are requiring homes that are $750,000 to $1.5 million to actually carry a $2,500 deductible. The $1,000 deductible may not even be offered at that level. And some carriers are requiring homes above $1.5 million to have a $5,000 deductible. So it is what this is doing. This is causing the claim count to go down, which is great. They're not investing those resources and getting the zero, not being bothered with small losses. It does cost a lot of money. It does cost a lot of resources, but we are seeing the severity of claims going up. Fires, burning to the ground, pipes bursting. You guys probably remember that flash freeze that took place in February 2023. That is also what's driving rates. And when customers come to us about a remarket, we take a look at it and ask them if their home is insurable. Do they want somebody to come out and inspect your home? Is there pride and ownership there? Are they comfortable opening their doors to have an inspection done on their property? Are there concerns that another carrier might see? Because it is standard practice when you move insurance from one carrier to the other, that the new carrier comes out and inspects your property. They want to get an idea of what they're providing insurance for. So you just got to have those conversations with all your clients up front as an agent. So the roof is the first line of defense against severe weather. A lot of people aren't checking in on their roofs after severe losses, looking around the attic. I know I personally don't, but 59% of people do not check their roof for issues after a big storm. And it's kind of pulled some trends across New England. Just pulled a little bit of data for you guys. 45% of the roofs are less than 10 years old. 10 to 14 are about 22%. 22% of the roofs are 10 to 14 years old, and then 33% of the roofs in New England are 15 years or older. So that, to me, as an agent, if carriers aren't writing business with a roof that is 15 years or older, that's 1/3 of the homes out there that carriers aren't even looking to entertain. The typical lifespan of a roof in New England is about 20 to 30 years. And again, it's just pride and ownership. Are people budgeting? Are people investing back in their home? Or are they just using it as a place to stay, letting the lawn go crazy, decks falling apart? Because all those things do lead to insurance. And the hot topic right now, the leading cause of loss right now is non-weather water related claims. Carriers like to say water, water, everywhere you're going to get wet. And the home features these days are a lot different than your typical home of the past. People used to have laundry in the basement. Now you're seeing 3-story homes, laundry on the second floor, the washer machine breaks, and all of that water has nowhere else to go but down. If there's a leak, it's going to continue to leak until you shut off the water. So a lot of carriers are making pretty big investments into educating their agents on the water shutoff devices. Basically, it's a device that you can put on the main water valve of your home. If it detects any type of unusual water pressure or water usage, it's going to shut down your system. These devices are very interactive, and you can kind of turn on and off the capabilities right from your cell phone. And what carriers are doing is they're offering a lot of discounts. They're offering about an 8 to 10% discount on your homeowner's premium if you have a automatic water shutoff. And basically, only 10 to 15% of homes have automatic water shutoffs today. And this is basically the same thing 10, 20 years ago. Not everybody had central fire and central burglar alarms. Now that rate's up to about 80+%. So it comes down to us as agents, you guys as real estate agents, is educating people on these type of devices when they are in a good time that you guys would kind of have this conversation if you know someone's buying a house and doing a renovation on their home. It's just a good time if they're redoing the basement, the walls are going to be open up, and it's a good time to kind of implement some of these devices. The whole focus here is to limit the time the water may be leaking. If it identifies a leak and the leak's only happening for an hour, that loss is a lot less and a lot more manageable. If the water's leaking you're away for the weekend, the water's leaking all weekend, you come home, that's going to be a lot of water in your house. So that's kind of the whole idea behind it. And the cost, every home's a little different. They do have plumbing services available in the high net worth space. They have a company called Beagle Services that will come in, take a look around your house, and make recommendations on what system is best for you. Obviously, pipe sizes are different, so they are ahead of that. And then just kind of closing, what can we do? We can educate the clients on what's going on, have them be proactive. If there's a 15-year-old roof, not necessarily saying that roof needs to be repaired right now. The lifespan could be 20, 25, 30 years, but just planting the seed, being like, hey, you may want to have this in your budget that you may need a new roof in the next 5, 10 years. What I'm doing on my end is I'm underwriting accounts, because I know when we get referrals from real estate agents, they come over to us, and that's an extension of you guys. It's a lot going on, especially for first-time home buyers, to get insurance. It's not a fun process when you write a piece of business just to get the binder to satisfy and close the deal. And then 2 months down the road, they get a notice in the mail saying your carrier is non-renewing your insurance because you have all these trees hanging over your house, your roof's too old. They get stressed out, they panic, and they lose trust in the agent. And that also, if you guys are the ones sending the referral over to a insurance agent, it just reflects poorly on you. And I know you guys sell homes, but it is just a good seed to plant. The rates are the most competitive when you bundle the home and the auto. So even though you guys are selling the home, it's just a good conversation to have and gets the rates as low as possible. If it is something that's right on the fringe of meeting financing or not, just always bundling in that auto policy. So I know that was a lot of information. Tried to go as quick as I could, but definitely want to open it up for some questions here.
So I guess for when you get insurance and or if something happens and you're like, oh, that wasn't covered and that's not covered and that was, so how do you know you're getting like right riders and getting the appropriate coverage that you need, as opposed to having something happen and then you're like, oh crap, that wasn't covered.
Yeah. Yeah. So that is a great question. So it all comes down to really trusting your agent. An agent's job is to educate you on all your exposures that are out there. Everybody has a different risk appetite. So then it's kind of what we do at Sullivan Group is we offer top of the line coverages, everything that's available to kind of cover ourselves. And then it's the client's job to pick and choose what they want to pay for, but they have to understand the coverages that are available. If a homeowner had a loss and I didn't offer them the coverage, what would happen is they could file a claim, an errors and omissions claim against the insurance agent, and it would come back on us. But that's a very good point, because we had those floods in Leominster last summer, and a lot of agents weren't educating their clients on floods because it was a low flood. The chance of having a flood in the area that was flooded were very low. It was probably a flood zone X, but it did happen. And if those agents, if they were going through like a Geico or Progressive, they may not have been aware that flood coverage wasn't a covered peril on a homeowner policy.
Yeah, because even like earthquakes aren't prevalent around here, but you can still get it. It's not that expensive. And then all of a sudden, I know we had a couple of earthquakes over the last couple of years, and I know people were like, I didn't have coverage for it. And if it just happened, you happen to catch, that path of the earthquake, you were
Absolutely.
covered.
Yeah. So yeah, insurance triggers based on the cause of the loss. The cause of the loss is an earthquake, and you don't have earthquake coverage. That's unfortunately, insurance carriers are going to deny the claim. They are in business to make money as well, but it is something that, especially on the high-rise condos, earthquake should definitely be on all of those policies.
So do you offer a checklist of potential riders that we should be giving to our clients to say, hey, think about these things and talk to your insurance agent about it?
I can definitely get that for you. I can definitely put together. I have basically a list of questions that I ask. Every client's different. So the way we do it is we just put everything on there. And then kind of, if it's a price play and they need to save some money to meet a loan requirement, then they can pick and choose what they pull off. But yeah, there's a lot. Every carrier is different. But the hot topics are, we can definitely get you a list of the hot topics and where we've seen a situation that's come up and what coverage would apply to that situation. I think that would help.
Right.
You guys.
Yeah, I think that would be super helpful, Tim, if you could do that for us. And because I even know I had a 3-family in the past that ended up having the water table come up, and I ended up not having coverage it was only for water down, not for water up, kind of thing, like you mentioned in Leominster. So, even that's one potential rider. Do you want coverage for, I guess, the water table versus the rain coming up above? But it would be great to have that checklist of things in terms of us being able to hand something to our clients so that if they do have questions, they could call you too.
Yeah, absolutely. No, I think that's a great idea. It's
And
different.
you-
Every carrier is a little different. Every risk is a little different, and who's going to offer what. So,
And you had mentioned the water shut off. I guess there's a lot of different things people can do, like just the temperature in their homes. They have all these different, smart home applications. So if we can get like a list to people when they buy too about think of these things to do, especially if you're gonna be owning a vacation home or something where you might not be there all the time, or like cameras, uh, just so you can see what's going on when you're not there. But I guess there would be a lot of green home or smart home things that we could give people pointers on.
absolutely. And they're not just the water sensor. The automatic water shut-off devices are pricey. Typically, they pay for themselves in 3 years. I don't know if right now, since all the carriers are trying to push this and get clients to have them. It's a loss mitigation technique that a lot of them are using, but that's not the only thing that's available. That you can get water sensors, which helps a little bit, but it doesn't necessarily shut off the valve. but there is some pretty substantial credits for that as well. And you can honestly just go on Amazon and your clients can order them. And basically how it works, it's a little sensor that you throw under the sink. The bottom of it gets wet. It's going to send your phone a text message being like, hey, this sensor under your sink is wet. Then that's going to trigger you to go look at it. Those can be purchased for less than $100.
And so it'd be good to know how much credit do you get for that for $100 versus how much credit do you get for the bigger cost thing, which was the actual shut off. Might be good to know.
Every carrier, so I wish I could give you a clear-cut answer on that. Every carrier is different. Some carriers don't offer a discount. So it really comes down to what carrier they're deciding on, the value of their house. And there's credit caps on policies as well. If they're getting a credit for the central station alarm, sometimes the credit's a little different for the water shutoffs. So my typical answer for that is when they ask about the automatic water shutoffs, the industry average is about 8%, and the actual sensors that go under the sink is about 2%.
Good to know. Again, that would be great on your little cheat sheet because this way we could send that out and 2% versus 10%, just on average. I know it's hard for you to say, but like you just did, that was good to know.
Yeah.
Because so it's 5
times
the savings. So if it's 5 times the cost, it might be worth it to get the higher cost.
Absolutely. And it's peace of mind too. It's not just the insurance, it's the automatic water shutoffs gives you peace of mind. If you have a family, 3 kids, you come home and your house is flooded. We've seen losses that people are misplaced from their house for 6 months. It's like, you gotta think about that. Do you want to have your kids be at a different school bus stop? Do you want to be living out of a hotel? Do you want to be living out of a backpack? So if that happens, you still might have a loss of a pipe burst, but that loss is not going to be a $300,000 loss. That's the whole idea behind it.
And having had a house that had a big water issue a couple of years ago in my New Hampshire house, I had the water pump line break and my whole basement flooded. So having had that happen, I'm very super sensitive about that. And I still haven't put that in my house, but now you've got me thinking that has to go on my list to do. So not only that, but my primary home too, like you said, the washer dryers going on different levels. It'd be awful if you had a leak. Aren't there some, I know some home inspectors mention putting like a tub underneath a washer dryer and to put a sensor in that tub under, it's like a little, you can buy it from Home Depot and you put the wash machine in it.
Yeah. So they do that. That's a great idea. But again, the little sensors are just identifying. It's like if that happens at night, 10 o'clock at night, you could be sound asleep, not seeing that. That's going all night. So
Then it goes over the tub. Yeah. Then it goes. So yeah. Good.
But and there's a lot of, so depending on what the client's involvement is, some of the carriers are offering discounts on the actual device itself. Like that little graphic that I had pulled up, like carriers are giving you 30% off the actual automatic shut off device itself just for being a member of Pure. That was from Pure Insurance. So they would give you 30% off the device as well as an 8% credit on the policy. However, it is always best before you tell them to install the device to have them check with their insurance agent first, because sometimes things like credit caps are capped out, and sometimes the discount's only $200. Sometimes it's $1,500. So it does vary.
Gotcha.
But we understand that you guys are the quarterbacks. You guys are getting thrown 5,000 different questions, asking for 5,000 different referrals. So you guys have a very tough job. Anything that we can do to make it easier, you got to have the agent cheat sheet. I think the cheat sheet would be huge for you guys, and just give you a couple examples because that's how you sell. You sell based on an example, and stories really hit home. So
great. Well, listen, thank you so much. We're past our time, but I want to thank you so much, Tim, for joining us and spending your time here. And everybody can see his contact info on the screen. And we'll do a replay of this in our next newsletter. So if people who weren't on here want to watch it, they'll be able to do so. So thank you all so much.
Awesome. Thanks for having me.
Okay. Take care.
Yeah.
Bye-bye.